And mutual funds, pension funds, endowments are unloading U.S. consumer stocks at the fastest pace in at least 14 years. Here with more on the trend and the retail sector, Randy Bateman, Chief Investment Officer at the Asset Management Unit of Huntington Bank Shares, which oversees $12 billion, joining us live from Orlando. Welcome to you, Randy.
Thank you, Lori.
As far as the retail sector goes, is this a story among the fund managers of the run is done?
I think that there's some parallels that we're looking at right now between the recovery we had in 1991 and what's taking place right now. If you remember correctly, in late 1980s, we had that first delayering of management and layoffs of white-collar workers, pretty much for the first time we've ever experienced that. So coming out of the recession of 1990 and into 91, the consumer was very hesitant with that experience in mind. I think we're seeing some of the same parallels here because the consumer is going through some things that they've never really experienced before with the housing prices and 401k plans that have become 201ks. So there's some hesitancy on the consumer. What carried us in 1991 was very, very robust business spending. I think what we're going to see in this cycle is a very robust government spending program.
So do you think the fund managers then are overreacting because they're tossing these things out left and right?
Unless there's some propelling reason to want to go into consumer stocks, I think unless the valuations become more compelling, I think you're going to see that trend continue. At some stage of the game, the consumer will be back. We won't have much of a recovery, and I think that will carry forward. But I think the consumer's taking a wait-and-see type of attitude before they really get in heavy with their spending. And then this Cash for Clunkers program has probably borrowed a little bit of spending growth from the department stores and other segments of the consumer economy because money's been spent on those automobiles that could have been allocated elsewhere.
It's interesting, Randy, because we see institutions that control almost $17 billion worth of funds selling out here. At the same time, the consumer discretionary index has risen 66%. So what's going on here? Are retail investors buying in as the big institutions sell out?
That's got to be the case. The institutions are perhaps looking over this valley into the recovery, and they don't like what they see. The retail investor just wants to get back into the marketplace, I think, and they've seen these good returns that have taken place thus far this year. The consumer area has been an area of attractiveness, an area that they understand pretty well, and can. And we've got to think about this now. We're no longer just looking at the U.S. consumer. We've got to think about the world consumer nowadays. I mean, the Chinese are just not buying ping pong balls anymore. They're buying a whole raft of consumer goods, and with 1.5 billion people, that's going to make quite a bit of an impact on the consumer economy all the way.
Randy, are they going to buy iPhones? We had the story today that the iPhones are going to start shipping to China. We're going to speak with the analyst Gene Munster, who's predicting something like 3 million expected iPhones to be sold overseas to China.
Yeah, I'm not at all surprised that we'll see a big electronics burst over there. Electronic power is more available readily throughout the country, and there's a little bit more consumer dollars. And I think very much like the Japanese did early in some of the cycles that they've experienced on the upside, we'll see the same thing taking place in China with consumer electronic goods being perhaps one of the most attractive.
And that leads me to wonder, does this re-emphasize the need for good old-fashioned innovation, that we just need to come up with the products, the ideas that people are, despite what their circumstances are, just going to say, this is a must-have, I have to spend money on it?
Yeah, technology always has a way of fooling projected expectations, particularly in the economy. And I think if you see some breakthroughs, then there'll be some positive. If you look at the breakthroughs we had in the past, I mean, obviously the creation of the Internet right before the turn of the millennium, so to speak, that had a real big boost in the technology sector, and you saw what happened to technology stocks on the way up. Obviously, it was a boom that ultimately burst, but we're seeing the same thing happen with the Apple iPhone and the opportunities that it presented to not only the consumer but also the shareholders of Apple.
Hey, Randy, let me get your thoughts in general on the consumer. I mean, obviously, the consumer is limited by how much money and credit he or she can get, but do you think consumer behavior really changes? I mean, we're used to buying everything we want whenever we want it. Does that change because of the kind of recession that we're looking at now, or does it just go forward and we continue on as soon as we can get our credit cards back?
Unfortunately, I think it continues on unfettered, Matt. The situation has been handed down from generation to generation that we're a consumer nation and that we focused on that throughout our development. I don't think that that's going to change. Now, it may changing its emphasis. You know, obviously there was a big emphasis in the last few years on buying houses and expending money for luxury homes, and that's kind of going away now. I think there may be some ratcheting down, delayering, desizing of a lot of different consumer expectations, but it's still going to be there. And as Lori said, technological breakthroughs may be the things that will stimulate the consumer in the future.
Randy Bateman, back in a moment. And we're back with Randy Bateman, the Chief Investment Officer at the Asset Management Unit of the Huntington Bank Shares, which oversees $12 billion. He's there today in Orlando. Welcome. Thanks for waiting through our commercial break, Randy.
Thank you again, Lori.
So we've been talking about the retail sector, and the hook of our story here is how these fund managers and pension funds are ditching retail and consumer names at the fastest pace in over 14 years. Do you think there is any retail name out there that's being unfairly punished? Is there anything that you think, you know, maybe a little bit off the radar that we should really take a second look at and not necessarily get rid of?
Oh, certainly there's a lot of names that are out there that are well managed and have a niche that's going to continue to look pretty attractive. I've used in the Citus Fund at Huntington, I've used Cabela's for a number of quarters now, and really think it's got an opportunity to shine, and actually has done fairly well. We like Garmin as well in the retail area. If you consider it a retail stock, it's kind of hard to tell whether that's a technology company or retail, but the applications are certainly growing every day, it seems like, for GPS technology. And then one of the things that you mentioned just a few minutes ago, Ralph Lauren. You know, I don't have the wardrobe allowance that Matt Miller's got up there, but I do recognize that Ralph Lauren has a great deal of opportunity to expand its operations and distribution throughout the world, and they make a quality product that's going to stand the test of times, I think. So a lot of retail names are really going to be good.
Who doesn't have enough time to go and buy some guns and camping gear at Cabela's? Let me ask you about...
I dress in camo, you dress in Ralph Lauren.
Well, camel Ralph Lauren sometimes. Let me ask you about the government spending aspect here.
Sorry.
Brooks Brothers is a favorite of mine as well.
Paul Stewart?
All right.
Sorry,
it's not really a Matt Miller fashion show. Randy, let me ask you about where you are investing, because the stimulus has given us, obviously, a boom in the market. It's helped out the economy a little bit, I guess, depending on who you speak to, but we're still looking at another $300 billion in stimulus next year. What are the areas of the market that you actually like? Because with all this money coming in, something's got to do well, right?
Yeah. Well, this is a cyclical uptrend. There's no question about the fact that I think we've bottomed out on this recession, and we'll start to expand in our GDP, and I think the numbers will start to reflect that. Now, where do you want to be in that period of time? I think traditionally you would have wanted to be in the consumer. Consumer is generally the initial stimulus in any recovery. But this cycle is going to be a little bit different. Just like 91, I think it's going to be prefaced with something else. I think it's going to be government spending. I think the infrastructure spending has some legs in here, and I think it's got some still opportunities. So if you look at the cyclical names, the Caterpillar tractors of the world, some of the technology names, some of the materials and energy producers and in the industrials, I think those are the names that we are emphasizing throughout the portfolios at the Huntington, thinking that we'll ride this cyclical crest a little longer.
Randy, give us some advice in terms of picking stocks in this sector. Do you look at valuation, other factors?
Yeah, well... hints on picking stock is always a perilous thing, because the market always has a way of fooling the rehearsed response and the traditional reaction. But we like management. If you've got a company with great management, I think you've got an opportunity to, or they've got the opportunity to weather with any storms that might be on the horizon and take advantage of any opportunities that are out there. So
who's your favorite
good management
CEO
is critical.
Right now?
Oh, I've got actually a couple of my fraternity brothers at NC State run. Mark Templeton runs Citrix Systems, and Jim Owens runs Caterpillar Tractor. Love both those companies, and both those guys know what they're doing.
We'll leave it there. Randy Bateman, thanks so much for joining us today.
It's a good answer from a good man. I like that.
He was a fun interview, absolutely.